The stock in focus is Tata Power. Now remember, a whole host of brokerages post the Q2 results had actually gone ahead and upgraded the APS estimates. They had told you about how this particular quarter was very important, and any sort of commentary that the company gave as far as the renewable portfolio was concerned, that it was planning to monetize via the InvIT platform. This was something that the street was anticipating very eagerly, and the company has given concrete plans on that, and the company has also managed to give a few updates regarding that. So what this basically means is that any kind of fundraising or debt refinancing as well as debt repayment is something that will be very good as far as the balance sheet of Tata Power is concerned, and this is something that is actually aiding the consensus buy call or the consensus upgrades that we are seeing, and a whole host of analysts on the street, just a couple of quarters ago, who were so negative as far as Tata Power is concerned, given the fact that Mundra wasn't seen any sort of a clear resolution. Now, the entire street, given the fact that the management focus is extremely strong on making the balance sheet quite lean, they believe that, the fortunes have changed. In fact, Morgan Stanley today believes that Tata Power 2.0 is what they're calling it, and they believe that prospects here are quite good. So what has Morgan Stanley done today? Morgan Stanley has maintained their overweight stance on the company. They have increased their target price from 72 rupees a share to 80 rupees a share. What they have done is they've actually gone ahead and visualized Tata Power post the InvIT. So what they are doing is that, number one, they've taken into account the fact that the management is quite confident about completing the InvIT transaction in the fourth quarter of this particular financial year. However, they have not assumed the InvIT transaction in their base case earnings forecast. Based on investor feedback, what they have done is they've actually presented a scenario analysis of Tata Power's post-InvIT financials, and what they have assumed is they've assumed that Tata Power will continue to hold 49% in the InvIT platform. So now, number one, what they're doing, they've taken three scenarios, where first they're saying that the proposed InvIT would be valued, or the valuation would be 1 time price to book. Secondly, they're saying 0.8 times price to book, and a more bullish case is where they're saying it will be valued at 1.2 times price to book. At 1 time price to book, Morgan Stanley says the net debt reduction could be close to 14,000 crore rupees, and the transaction could be 4.7% EPS accretive for FY22. Now, this would ensure that the net debt to equity would fall to 1.01 times in FY22, and the net debt to EBITDA would be 3.44 times in FY22 from the current 4.17 times. Now, what they are saying, they are reflecting stronger earnings for Mundra, incorporating the new renewable capacity pipeline awarded to Tata Power, and stronger solar EPC business. Focus, as per Morgan Stanley from Tata Power, is on increasing exposure in the regulated business, a healthier balance sheet, and stronger return ratios. And all of this, Morgan Stanley believes, makes prospects very positive as far as Tata Power is concerned.